Hello, Christina. It's good to see that other people have this meeting. I wasn't sure if it was this meeting or a different one.
Hi, Daniel. Thank you. Yeah, no, we got it. I was on and then I got disconnected. So I just joined back in.
Out of curiosity, did you find it through meetup.intel.com? Wondering if
Uh,
that's going well.
well, yeah, it's still showing up on my calendar for Meetup as well as my personal calendar that I put it on.
Okay, cool.
Yeah.
Good to know. Hello, Henry. And hello, Anna. Hopefully our speaker will be joining us in a moment. Unless I accidentally booted him by the other meeting that I started. Welcome here, everybody. Welcome, Brad. Welcome, Henry. Welcome, AT. We're just waiting a few minutes for people to join and for our speaker to arrive. There's Bob. Nope. Still connecting his audio. Hello, Bob.
Howdy.
Hello, Jay, and hello. I'm not exactly sure how to say your name, so forgive me if I say it wrong, but Tiags?
Yeah, that's correct. Tiags.
That was a lucky guess on my part.
You're good. Thank you.
Good to have you here.
Oh, thank you.
I'm curious, what country is that name from? What nationality is it?
India.
Okay.
So it's a short name for my last name. I have a very long last name, so I kind of made it short for people.
Gotcha. Yeah, I'm usually a stickler for pronouncing people's names correctly, so I always like to know.
Thank you.
And Rohan, I had no doubt that you would be here. Thank you for referring today's speaker.
Hey, Daniel, no worries.
I don't see him here yet, though. if you can text him, let me know. He should be here. He sent me his presentation already. All right, and Anita's our speaker for next week. And actually, Anita, if you're there and able to respond, I have a question to ask you. So just to let everybody here know, I'm actually going to be road tripping with my family. We're camping our way across from Portland to Chicago so that my wife can go to her 20th college reunion. And I need to find people that would stand in to be the moderator for the next 3 weeks. I'm going to try and dial in and be there if I can. And if I have a connection. I have no idea if I'm even going to have a connection or not. But Anita, you're our speaker. I believe it's next week, right?
Uh-huh.
So would you like to be the moderator also, or should we find somebody else that can do the moderation while you speak?
I'll volunteer to do it. I just have never done it.
Okay.
So.
Oh, it's easy. It's easy.
Okay.
But I need 2 more volunteers actually for the next 2 weeks. I'm probably gonna count on Glenn, I think, and I need 1 other at least. So let me know if you're interested. Basically, all you need to do is just start the Zoom meeting, introduce the speaker, which I see our speaker for this week is in, and then collate the questions and try to keep the conversation going.
Okay, I can do that.
Yeah.
I
If
guess
you're,
I'll be asking myself the questions, right?
you could do that, and of course, you can look at the audience's questions too.
Okay.
All right. Hey, welcome everybody here. Looks like we have kind of a small group today. I'm wondering why that is, but it's always interesting, I guess, to note the ebbs and flows of attendance, just depending on what people are doing. Happy first meeting of summer. We've officially passed the summer solstice, and it is officially summertime. So welcome to the wonderful weather. And if there is anybody that has any opens before we get started and we introduce our guest speaker today, feel free to take yourself off mute and bring up any topics that you want to bring up. In particular, we actually are booked out fairly well. I've booked every Friday going into September now, so we've got a bunch of really good speakers coming, like people who really have done well in real estate. I talked to a person this week who has 224 mobile home parks. And so we have a couple of other equally good people coming as well. So I'm looking forward to it. We have one person who owns 2 banks and a bunch of real estate. He bought a bank to finance his own real estate deal. So those are interesting. But we've got a mixture of people as well. And so if you want to have a topic, we have a trust attorney who's going to be coming on soon too. Peaceful Warrior is her website. Peaceful Warrior Lawyer, I think, is her website. If you have a topic that you would like to hear about, please take yourself off mute and just let me know, or put it into the chat if you want to do that. We'll wait for a moment and then I'll introduce the speaker.
So Daniel, you're saying that I get to go before the really interesting people?
I called you out
Oh my
first,
God.
Anita, remember?
Oh my God. Y'all gonna be like, what the heck? Y'all got me up here talking.
No,
But thank you.
No, it's, honestly, I love hearing from everybody, no matter, because it's important to, no matter, if you've got really big real estate pockets, or, no matter where you are, you've got a story to tell. So, Anita, I know you're going to be interesting.
Oh,
you
it
already
will
know
be
that.
interesting. I'll guarantee you guys that.
All right. Anybody else? Any topics that you would like to hear about? Where can you find the previous meetings? All right. It is so much work, and I am promising you that I will get these videos out. So we do have a Speakers Hall of Fame if you go to the alternativeinvestingclub.com. It's only a couple of speakers currently. I've been posting the more current each speaker as they've been speaking. So we've got the last, I think, 9 speakers up there. And there's a few more up on our Rumble video account. I'm going through and getting transcripts and getting the permissions from all of our previous speakers. So at some point, and I'm hoping sooner rather than later, there's going to be a big update on the website, and we will have, it'll be searchable. I'll organize them into categories. You're going to have the complete transcript and videos, and you're going to have just a searchable index into all the transcripts. So I'm looking forward to that coming out, and you can find a lot of them on Rumble right now if you go to the Rumble account, which is linked on the alternativeinvestingclub.com webpage. All right. And all the old ones, if you are an Intel employee, I believe all of the old ones are at videoportal.intel.com. Thanks for pointing that out, chat room. All right. Is it Barat?
Yes.
Welcome here.
Hello, everyone.
My understanding is that you're going to tell us about the Kansas City market. And I want to thank you and preface this by saying that here as investors in the Alternative Investing Club, it's really important to know not just your own backyard, but to know other areas and other locations, because every different place is in the cycle of boom and bust. And while some are booming, others are busting, and vice versa. So knowing what's going on and being able to invest in remote locations, I think, is key to an investor's development. Having said that, welcome to the group here. You're going to talk to us about Kansas City.
Thank you. Thank you, Daniel. I'm excited to be here. And I want to thank Rohan, who has referred me here. Thanks, Rohan. So I'm going to be talking a little bit about the multifamily and what's happening this year. This year is significantly different from prior last 4 or 5 years, I would say. Then I will get into Kansas City, my primary market. And then I'll talk about a little bit about my investment philosophy and some criteria for limited partners. So with that, I'll get started. Then if you have any questions, you can ask me at the end. Can I share my screen?
Absolutely. And if you have questions, feel free to put them in the chat. I'll mark them with the little pencil icon to make sure I see them. And Barat, also too, I've got a lot of questions, so I may interrupt on occasion and try to create a dialogue if that's okay.
Yeah, please. Give me a trying to. Okay, can you see my screens?
Yes, we can see it's not in presentation mode, but we can see PowerPoint. There's a little icon down at the bottom by the zooming bar. Okay, there you got it.
Yeah, thanks. Right, let's get started. I want to say, starting, I'm not a public speaker. I enjoy talking more informally, one-on-one or in a smaller groups. Having said that, I'll do my best. So I'm an immigrant from India. I was born and raised in India. I came here as a student for a grad school. So I'm an MS in engineering from University of South Florida. And years later on, I got an MBA from Santa Clara University. I lived and worked in Silicon Valley for the last 25 years. I've recently moved to Sacramento area. I currently live in El Dorado Hills. I'm enjoying the change of place. Definitely like it here. And I worked in high tech, worked for some well-known companies like Deloitte, Greenplum, and Apple. That's my background personally and professionally. So my story is that. Sorry, is there a question?
I muted them.
Oh, okay. And so I was around. I was in Silicon Valley when the dot-com bubble, all that happened. So I learned it very hard way that you can't have all your eggs in one basket. No, that experience stayed with me over the years. So I wanted to find alternative investments. Where can I have more stable, long-term growth? And eventually came across multifamily way back, towards the end of 2018. Then I started investing in multifamily in early 2019. And I also became a syndicator as part of the journey. I was not planning on that way, but it happened. And I've been enjoying the journey since then. So as of today, I have 300 doors as a general partner, and I also have about 4,000 doors as a limited partner. And my primary market has been Kansas City Metro. I started there, and I have about 3 properties out there, and I completed 1 full life cycle in one of them, and I still managing 2 more out there. Currently, I'm expanding into new markets and as well into construction of multifamily properties. And what do I enjoy most? I'm really passionate about educating everyone I come across about alternate investments. And I keep talking about that. I'll talk a little bit about towards the end about that. So what's happening in multifamily? Most of you probably heard multifamily, the transactions have considerably slowed down or by nearly 3/4. Why? Because of one simple factor, higher interest rates. Of course, as you know, that has been impacting every other asset class and everything in a broader economy, actually. And we don't know. I'm not an expert on macroeconomics or interest rates, but hopefully we'll find lower rates towards the end of in the middle of next year. Yeah. So this year, the interesting thing that the sellers are caught up in 21, 22. They are not lowering the price. They want to sell, but they're not willing to lower the price. And the buyers, people like me, are not able to find value because, the higher interest rates, we are not able to get the same returns, as previously. So it's stuck in that stage where there are not too many transactions this year, actually. And again, rents are flatter. Rents has been going significantly in some metros and in a smaller percentage in the rest of the market, but it has been flatter this year, and construction costs have been going up all through last few years, especially from the inflation, not inflation, sorry, during the pandemic times, and it's still continuing to rise. That's overall, and costing more to build new either single family or multifamily. And the last point I want to say that this year is a year of operator, the asset managers, the people who work on daily or weekly on every property, who manage the property management. They need to be strong asset management with strong focus on expense management. They need to look at every single expenses, maybe defer some unnecessary capex, or nice to have capex, let me put it that way. But if it's something is needed, of course they need to work on that. So definitely this is a year of operations, and that's what I and my partners have been doing it across our properties. So multifamily growth. This is the only asset class I've been doing it, actually, except for one of my properties. This is what I have invested. This is what I plan to do going forward, all that. Most of the asset classes are slowing or flat, I would say, except multifamily. And I'll explain that more in a bit, actually. And multifamily did exceptionally well in housing crash during housing 2008. This is one of the very few asset class that did not crash or in 2008, and also did very well during the pandemic. That we got most of the rent collections. There has been very few delinquencies. Most of them have paid, or they got some rental assistance thanks to the government or other assistance programs. So, and again, this is my expectation that transactions are going to be normal or significantly increase from now by the second half of the year. Why? And I expect interest rates to correct or get lowered by in the first half of, or at least by middle of next year. That'll help the transactions, actually. Organic rent will continue, if not double-digit rent growths. That's going to happen. Why? Because of the demand, and the growth in multifamily constructions will outpace single family. Why? There are significant factors for that. There's more demand for the multifamily units than single family nationally. 25% of millennials prefer to rent always than buying. This is a new segment, Currently, there's a housing shortage by 6.5 million that includes single family, multifamily. Even with all the construction that's happening in multifamily, we are still going to be shortage by 4.3 million in about 10, 12 years by 2035. With that, I'll get into Kansas City. Well, I never expected when I started my journey in multifamily, I never thought my city, my first city will be Kansas City, and never thought my primary city will be Kansas City, at least, It happened by more of an accident, and, some accidents are lucky. Turned out to be good. So Kansas City is the Midwestern city shared between two states, Missouri and Kansas. It has been one of the few Midwestern growth metros, and strong positive demographics there. Nearly 10% growth from 2010 to 2021. The overall metro, not the city, the overall metro is nearly 2.3 million population right now, including all suburbs and all of that. And most of the growth actually happened in the last 7 years, the influx of population, new companies are coming into that actually. And I've been to Kansas City several times. Love the city. If you like barbecue, jazz, all that, that's the city you should go and visit. As far as the industries is concerned, they're diverse. That's one of the things I liked about the Kansas City. It has healthcare, manufacturing, transportation, retail actually, and even tech actually. And if you look at Kansas City, it's right in the middle of the country actually. So there's a lot of traffic, transportation and the distribution that happens through Kansas City. And the last point I would say, when we started investing, me and my partner started investing in Kansas City, the price per door was like $40K, $50K per door in multifamily. I'm talking just multifamily units. It's nearly double now. We can't find anything below 85, 90K. And even some of the units are going for 100, 110, and 115. And I'm not talking about the Class A units here. I'm talking about C plus and B units actually here. And with that, I'll go to my next slide. What am I seeing this year? And what am I expecting in the future years? The rents are flatter. It's following the national pattern. So we're not pushing for the rent growth, rent hikes as in the previous years. We're keeping it more flat, a little bump like $25, $50 units. The vacancy I've seen a little slightly up, very small percentage points. So we're coming up with creative way to rent them out, giving some rent concessions or sign on, half the rent off, first half of the first month rent free and all of that. And there's a lot of construction too happening in Kansas City, like in any other metro. That's, I believe, adding to the vacancy. The transactions are down just like nationally. And Kansas City, the demographics are expected to grow over the next few years. And the new employers are coming in or expanding, at least in Kansas City. And there is a construction of a new airport terminal in Kansas City. And that is expected to add hundreds of jobs directly and boost local economy. And that's about Kansas City. And any questions I can answer at the end. Let me go to my next slide. This is my investment philosophy that I would like to share. The single most and the always thing I look for is demographics, and demographics, population growth, the job growth, the income out there. What is the household income and everything? Well, that income is good enough for the rent I'm expecting, So typically, if I'm expecting $1,000 per month rent, I would expect the income to be around 45K actually, and I usually focus on in a large metro and an emerging market, that's my personal criteria. And I always have boots on the ground partners, You can still manage if you don't have boots on the ground, but personally look for that, people who can go look at our renovations, work with the property management company, what's happening, how is the property looking any given day and all of that. And I also partner with very established, experienced multifamily property management company. In the beginning years, we had some, unhappy experience partnering with some company who have been single family but wanted to move into multifamily, or companies who don't have the experience to manage larger properties and all of that. So I look for that, and I partner very closely. I develop that relationship, and we have that weekly calls. I also have one-on-one calls with the regional managers and the company and the company owners and all of that. In addition, we continue to have a relationship with the brokers and agent, especially in Kansas City for them. I text them. If I'm in town, I'll let them know, hey, I'm in town. Would you like to meet for lunch or coffee and all of that? But this year has been interesting. They're reaching out to me. Said, hey, Barat, are you looking for that? Are you and your partners are looking at that? I've received more emails and text messages this year than combined all last 4 years and all that. And other side, I always maintain a strong relationship with my investors. Most of my initial investors have been friends, classmates, and people I know very well. Then my investor base included people I met at other forums, real estate events, all of that, or referrals and all of that. So I do have one-on-one calls with investors, and I communicate by email as well. And in those conversations, I keep educating about alternative investment. I keep saying, don't go beyond equity market. Don't put everything in equity market. And most of as my investors are in tech. They're been in tech space for decades. Most of their equity is in stock market. They don't know where to invest. They don't have that background, or very little knowledge about it. So I kind of walk them through why multifamily investment is a great for a long-term wealth appreciation, and how they can get started actually. And I talk about the returns. I talk about what they need to know, and the tax benefits. And you probably know that multifamily provides the greatest tax benefits. There are other asset classes, but multifamily is one of the few things which combines all of the cash flow, equity multiplier, the tax benefits, the stable class. All of that, if you combine, this is one of the best asset classes actually. And the last one, if I could add any value to you, this is it. This is one slide. I hope to add some value as look for demographics. Look for is there a net population growth? Is there a job growth? Actually, please. do not invest in markets where it is population is flat or especially declining. Do not do that. Household income in that neighborhood, in that submarket, actually, look for at least 45, 50K, please, at least in 3 miles, 5 miles radius, actually, in that. You can get all of this information on Google. Google is great, by the way, with few words, you can get most of the information. Or go to Justice Map, you can identify that area, look for that income and population. There's a few more websites, including US Census. And as I said, once you got all the information about that city or the metro, get into the submarket. How safe is that neighborhood? You should look for very low crime, actually, that's important. How are the schools out there? How good is the public transportation? Is there buses close by? It's a walkable distance and all that. And go to apartments.com or other sites. Look for compare the rents from the property that you're interested to similar properties. If it's Class B, look for Class B. Don't compare to Class A or Class C and all of that. And most importantly, proximity. The multifamily is very important. They look for how close is the retail, restaurants, like a Starbucks, that Target and other things. This is very important. If I'm investing in anyone's property, this is what I look for it. Okay. How close is Starbucks? The retail, actually. And one of the properties I'm working on right now is actually, I was there like 2 weeks ago. It's a new construction, and right across the street there's a Starbucks. You can't beat that, actually. And the chains like Starbucks, Target, Walmart, they do extensive research, before they starting a new location. So that's, if you have a Starbucks or a thing or even close by, that's a winner, truly, actually. Any of this, larger retail stores, actually. And the last point I want to talk about is that know your team. You should know them well. You should like them, and more importantly, trust them. Know their track record. Know their thing. Ask them how long they've been in this line of business. How many properties they've closed on. How many properties they've exited. Have they done any capital raise after the initial close? And actually, that's not big red, but it's yellow, and have 2 or more one-on-one phone calls with them. Or if they're local, just go and meet them in person. Have coffee with them, ask them if they have more than one partner in the area, meet all of them, ask all the questions, and get referrals too. Ask them who are their investors, if you can get some referrals, and talk to them as well, please. And once you have done all of that, please review all of that investor presentation document and the subscription document fully. Go through it. It'll take, spend some time to fully vet the documents, understand what you're signing on, and all of that. You need to understand the returns, the whole time, and all of it, actually. So finally, the last one, if you want to get hold of me, contact me in the future. This is email and phone number, and you can also take out your phone and open the camera app and that. So I'll stop sharing.
Yeah. All right, Barat. I really appreciate your story, because I think that, first of all, your enjoyment for investing really shines through. And I love seeing that. And I think you're a lot like many of the other people that are in this call right now, in that, correct me if I'm wrong, but I think I heard you say you come from a tech background, right?
I do come from tech background. I've been in tech for like 25 years in Silicon Valley. And right after my master's, I moved to Silicon Valley and I worked, started my career and worked in tech only. Yeah. We can't hear you, Daniel.
I have a lot of follow-up questions, and I'm going to start having a dialogue here and draw some of them out, and particularly about.
Sorry, Daniel, I don't know what's happening. I can't hear you. You're coming in and out.
It's muting, and it's not me doing it.
Yeah, now I can hear you.
Okay. Could you hear me just before? Anyway.
I lost you for some time.
Okay, so what I was saying is that I have a lot of questions for you and would love to start a dialogue around some of your process and thoughts in Kansas City, but I'm hoping this will also jog other people's imagination and help them to put questions in the chat that will help us steer this conversation as well. So if you have particular questions or if something, jogs you to ask a question, please put it in the chat and our conversation will go that way. But I wanted to ask you, first of all, what did you do in tech? Could you just share a little bit about that? I mean, the people in this call are mostly tech people. What'd you do in tech, and I guess how did you translate over to investing in real estate then?
Sure. I started my career as an engineer in tech, and within a few years, I realized that I'm not a good engineer, or at least I did not enjoy that. So, but I like the tech. I really like the tech. So I want to be in tech, but I don't want to be an engineer. So that's when I started MBA part-time in Santa Clara University. I transitioned during the MBA program within the same company. I transitioned into the business side of it, the management. So I've done program management, product management, consulting management, IT management, all of it. Actually managed teams, global teams. I delivered products, all through my careers and managed programs. So why and how did I get into multifamily or alternative investments? So as I mentioned, so I was around in Silicon Valley when the dot-com bubble burst. I lost 95% of my, portfolio. That's it, And I was very young, obviously, and I didn't have any other idea. I never expected that. So that experience was painful. It stayed with me over the years. Then the last 7-10 years when the stock portfolio in general has been appreciating, I wanted to get into alternative investments. So I started talking to my friends and others. I started researching. That's when I came through multifamily. It's a stable, long-term wealth appreciation. And that's what I liked about it. It's not like fix and flip overnight or 1 year, all of that. So that's why I liked it.
Did you start investing in multifamily while you were at your job, or did you quit your job and go completely into investing?
No, I was having a full-time job while I was investing. That's how I started. As I said, I wanted to be just an investor, but the journey took a little different path. And some of my partners, they asked me if I would be interested to be general partner. So I became a general partner. That's how I started with Kansas City, actually. But now I quit my job just recently, just literally.
Oh, congratulations.
Yeah. Thank you.
Do you actually live in Kansas City, or are your partners in Kansas City?
I have one partner who lives in Kansas City, or actually I should say two now. I have two partners who live in Kansas City. They are my boots on the ground people.
All right, that brings up an interesting topic, because if you aren't investing where you live, that means you had a choice of investing, anywhere you could find a partner, basically. So what really drew you to Kansas City? Why do you like it more than Texas, where so many people are, or New Jersey, or some other area where there's lots of syndication going on?
Great question, but initially it was more like I was given that opportunity to become a partner. So it happened. Okay, you know what? I was asked, okay, let's see. and as I said, I looked up, I did all the research, due diligence, and everything. I liked it. Okay, let's go there. So once I started, I started with my first investment that opened up more opportunities for me out there. And I started talking to the property management companies, other vendors, and I started traveling there. I would meet more and more people, and the other, so the brokers and agents that actually helped me to understand more about Kansas City. Okay, you know what? There is a potential here. I don't have to be in Texas. I don't have to be in Florida. I don't have to be in Phoenix market, where everyone is, is trying to invest and actually driving up the, the
There's a lot of competition there.
competition and driving up the volume,
Okay.
prices there. So that's what happened to me. Although I did invest, I'm not saying that they're all other banks are bad. They're all good. I invested myself, but my Kansas City is little lesser competition, and at the same time you're getting the higher returns, just like Texas. And I think we are getting a 2x returns, for all our investors.
Now, Manju in the chat is asking, which side of Kansas City are you investing on? Are you in the Kansas City side or the Missouri side? And what neighborhoods do you like?
Great question. I've invested in both sides of Kansas, both in Missouri and Kansas. I like Lawrence. My biggest property is in Lawrence. It's near the University of Kansas. And KU, it's called Kansas University. Why? Because it's vibrant, the income is pretty high, and there are students, there are young adults, and there's a lot of retail out there. So I definitely like Lawrence. I've been looking into acquiring more properties out there. I've not found anything so far. My other properties have been in Missouri. One is near the airport, Parkville. My expectation is that with the airport coming up, there's going to be drive up demand there. So we had an opportunity to sell that. We were nearly getting more than 2x, but said, okay, let's wait for another year and a half. That's the thing. And what do I like? I like Independence. I like Independence, to answer the question. That's a really good area. Everything near the airport could be good. Again, there's no guarantee out there. And Lawrence is really definitely, it's a little 45 minutes drive, but it's really good town too.
I've actually evaluated deals in both of those areas, and I agree. I like both of those areas as well.
Good.
So the question is, actually, you had an opportunity to become a general partner in this area, and so that drew you to Kansas City. But why should the people, as potentially limited partner investors on this call, why would you recommend somebody else invest in Kansas City?
Great question. And well, you can compare Kansas City to other Texas cities or Florida. It's all flattening right now. The rents are flat and everything. And the demographics are continuing to be positive in Kansas City. And, rents are flattening in Kansas City. It's just no question about it. But the next 2-3 years, and I expect the demographics to continue to rise, more jobs to come to Kansas City, and that would drive up the demand for rental properties, and that in turn will drive the appreciation and the returns. That's the thing. But the key is to find the right neighborhood and the right property.
Right. Glenn is asking, and I don't know if you want to be specific about your numbers or maybe just numbers in the area, but do you know what a good dollar per door number is? Do you pay, in his question, he's saying $80K a door? What would be considered a good price for like a 2-bedroom, 2-bath, something, or 2-bedroom, 1-bath?
Good question. It's hard to give a number. I'll tell you why, because it all depends on what class of property. The which neighborhood is that. If you go to Overland Park, they're going to be very expensive, and if you go to like other areas, parts of Independence, if you go to Belton, it could be very cheaper. But 80K is good number. If you can find the 80K per door in a good neighborhood, go for it.
Have you seen that number?
Yeah, not in
It's
recent-
hard to find that, I would think.
Yeah. The last one I found was 85K in Independence. If I see 80K, it's really was a property that was mismanaged, heavy lift, and in a bad neighborhood. So look for right now the average prices are 90 to 100K, I would say, per door.
All right. There was a question a little bit earlier in the chat from our John Doe, who attends every week just about, and I still have no idea who he is, but John Doe was wondering where you got the numbers from about the housing shortages, and maybe just elaborate a little bit more on why do you think there's going to be housing shortages that'll keep the prices of multifamily or rental properties high?
Oh, okay. All of this is from the real estate companies like CBRE and everything. I can share the links if you want to. It's all from Google. If you just say real estate, multifamily, or shortage, and all of that. If you just type in the Google, you'll see the same numbers that I presented in the there. And sorry, what was the other question?
Why do you think there will continue to be shortages into the future?
Because we are not building enough. We're just simply the country. There is bureaucracy in many cities. They're not approving that money. Have you heard a phrase called NIMBY, not in my backyard? That is still is a problem. Although some cities, including California, are finally realizing this problem and they're giving more permits. So it's simply one demand versus supply. The supply has been slow, has been in shortage, and the problem got worse during the pandemic. Actually, we stopped constructing everything. So we're not meeting enough demand right now, both in single family and multifamily, and that's going to continue in the future. Actually,
and I would actually add to that a lot of the economics that we've seen recently with higher inflation, higher expenses, property, materials costs are going up, and regulation in many areas is going up, and these are all adding to the cost to build. And unfortunately, what that means is that it isn't price, it doesn't pencil out to build lower income housing unless there's a subsidy involved of some sort. And so this is causing a lot of people to build, nicer units that rent at higher prices. And there's an underserved market in maybe just normal prices, which of course creates, shortages in those areas and causes the buying and selling prices of, your low income or your starter home or your starter rental spot to be in demand. So it's a lot of the rising expenses are causing prices to continue to rise, and we're not seeing a pullback, unfortunately.
Yeah.
All right, go ahead. You have something to add?
No, that's absolutely true. The construction costs are, is a big factor, that is slowing down the, construction.
You actually mentioned construction and getting into construction projects. Do you like buying existing product or existing properties, or do you like new construction? Are you bullish on one versus the other? And what made you think about new construction more?
I've done only existing properties, and not done new construction. And tell you why I'm getting into new construction. And my experience has been buying existing properties, value add, properties, and force the appreciation, the rent growth, and all of that. So I've done that. But over the last 2 years, I'm finding the value deals or value add deals are slowing. I'm not able to find even my partners and everything. So I said, how do we meet this? How do we overcome this? I said, we need to diversify. We need to get into some new construction. That's how I came across one property right now, and it's all the way in Sioux Falls, South Dakota, and Sioux Falls is an emerging market. Everything, and so as I mentioned, I'm going beyond Kansas City. We are building a 180 units construction, everything. I'm bullish on both. I'm talking both have great potential and everything. And if I'm still going to focus on value add over the years, but I'm also, if there is a nice new construction deal, I'll add that to my portfolio.
Right. Glenn is asking, are there any special tax incentives that the government in Kansas or Kansas City provides that would make that area attractive from the point of view of adding value to a deal through tax exemptions?
Great question, and I don't have a great answer. I don't know. I do know that if the land is an opportunity zone, there is considerable tax benefits, for the investors. You can defer the taxes, and if you hold the property for 10 years, there is other tax benefit that you can, if you hold that, then you don't need to pay any taxes, on the appreciation on that. Having said that, since I've not built anything new in Kansas City, I don't know on that. But something that possibly exists. I don't know.
Okay. Tariq wants to know how he can connect with you on LinkedIn. Are you on LinkedIn?
I'm on LinkedIn. Look for
All
my first name, last name. I am there.
I see. I was going to drop a link into the chat for you, but I see several people with the same name there, so I'm not sure which one's yours.
Oh, okay. Just give me a second. I will put in the chat window.
And while you're doing that, Richard is asking about your property construction near the airport and how is it situated relative to primary flight paths for takeoffs and landings? Does that affect the value?
Just give me 1 second.
Okay, sorry, I didn't mean to give you something that was going to occupy you there.
That's fine.
But I think people do want to reach out to you.
Yeah, I'm putting it in here. Here.
Perfect.
I'm going to put my number 2.
Oh, it was the account that I saw there. I wasn't sure if that was you or not.
And the last one, I'm going to put my, sorry.
Any other questions from the chat room here? The Kansas City area. I want to know when you're
what was the
investing.
question you asked me earlier? That I.
I'm sorry. We didn't get to the flight path. Your new construction that's near the airport. How is it in relationship to the flight paths, and how does that affect the value?
No. My new construction is not in Kansas City. All my properties are existing properties, value add in Kansas City. My new construction is in Sioux Falls, South Dakota. And Sioux Falls is an emerging market with great demographics. Love it. I was there for 2 weeks ago. The average income is pretty high compared to national healthcare jobs and banking and other jobs. There are more banks in Sioux Falls than any other place due to the lower regulation there. So that's the new construction out there in Sioux Falls. And Sioux Falls is like a smaller city. You can go there from one end to other, maybe like 15, no max than 20 minutes. But it's a great city. I loved it. And I hope to spend more time in the months, but I don't have new construction in Kansas City.
Okay. What about just your previous buildings? Do you take into account flight paths when you're investing near the airport?
I do.
What does that due diligence look like?
Yeah, the due diligence is multifold, as you know. And we look for the property. We bring all these vendors. We go through each unit interior, the exterior, roof, and all of that exterior. We do go through that. We do the finance due diligence, rent roll, and all of that. And finally, we look at the neighborhood. How safe is the neighborhood? How far the flight path, everything. We do have one property near the airport, but it's not next to there. It's about 15 minutes away, actually. 10 to 15 minutes away. It's pretty far from the airport. So we do look for that too, actually, you know.
Mhm. Glenn wanted to follow up on the difference between Kansas City, Kansas and Kansas City, Missouri. Do you have a preference between investing in one versus the other? And what should people in this call consider, when they hear Kansas City and one side or the other?
Oh, love that question. I've been asked that question. I love the Missouri side. And most of the city is actually is in Missouri. Part of the city is in Kansas City. Why? The most of the companies are on the Missouri side, on site, and the taxes are a little lower compared to Kansas City. That's one of the important factors actually. The property taxes and the insurance can play a significant factor. By the way, insurance is going up across nationally, especially in Florida, Texas, even in California. Watch for it. Ask your syndicators if they've taken into consideration the higher insurance costs. Actually, that's an important too, in addition to property taxes.
Okay. That's all the questions that I have for you for now. I don't know, Richard, you seem to have a question you want to ask. Do you want to take yourself off mute and ask that, or did we cover it well enough? Okay. He says never mind. All right then. Let's see.
Richard has a question. I think, is that a question we already answered?
Yeah.
Okay, I think we answered.
So if there are no other questions, then and you gave your contact information here. Thank you for coming in and speaking to us. Can we have everybody take themselves off mute and thank Barat for coming in and speaking to us?
Thank you, Bharat.
Thank you.
Thank you.
Thank you.
Thank you, Barat.
Thank you very much.
Thank you, Bharat.
Thanks, Bharat. Thank you.
Thank you very much, and thank you, Daniel and Rohan. It's been exciting to be here, and thank you for giving me an opportunity to talk about my journey in Kansas City.
Thank you for being here. It's great to hear another person who's enthusiastic and smiles the way you do while talking about it. So, and next week for everybody, we're going to have one of our own in, Anita, who's going to be talking about her journey through self-directed IRAs. And so we'll see you all next week, Friday, same bat time, same bat channel. Have a great weekend, everyone.
Bye. Thank you.
Thanks, Dan.